Okay, traders, here's part 2 of the CM Trend Followers webinar. And to pick up on the preface where I left off, first segment, none of this is a magical elixir for trading. Okay, nobody on the face of this earth, with zero exceptions, can provide you with a black and white, no-brainer, systematic type of deal where you can just press, it tells you what to do. Nothing's going to flash on your screen, buy or sell exactly here, and okay, cover exactly here, and you're going to make money. That just doesn't happen. Okay, it cannot happen, especially in today's markets. I mean, seriously, think about it. You know this. You're an intelligent person. Do you honestly believe that the biggest hedge funds hire MIT grads who are mathematical geniuses to write programs, and they spend tens of millions of dollars, hundreds of millions of dollars in some cases, with co-location fees and all of the setup, so they're millionths of a second faster than their competitors and so on. These are the systems that are out there, and somebody can come along with retail quality software and write a black and white system that can beat that can actually take money away from them. Impossible. Right? And I say this, I preface this by preparing you. If you're not willing to be a thinking trader, if you're not willing to be a self-directed trader, then you can't trade. All right? You might have money managed in some fashion or some form, but money in your account with you making decisions, it's never gonna work. Whatever your balance is right now is the highest it will ever be. On the other hand, if you want to be a self-directed trader pushing buttons, if you're willing to think and feel and act, you can succeed if you have the right information. That information absolutely has to keep you on the correct side of price direction when there is any, because no one makes money in sideways markets other than hedgers and spreaders, and that's outside the topic of this discussion. All right, but no self-directed individual trader who's trying to get long or short when a market is going up or down can make a dime unless they're on the correct side of price more often than not. And what we use here at Coiled Markets are things that are price action based with statistical probabilities. All right, the first chart up here, I'm trying to find my cursor, is the CM TrendBender, and we'll talk about that last. And what we have here on this S&P chart is the dynamic pivots. This is a very simple study. This just measures price unto itself, whether it is in the 75 percentile, 50 percentile, or 25 percentile of the most recent high to low extreme. Let me say it another way. The first, whatever setting chart you have, this could be 5 minutes, could be 60 minutes, could be a day, it could be 10 seconds, it could be, volume or whatever you want it to be. The other, bar-based charts like Renko and so on and so forth. When a bar is formed, price will express itself in percentages from the low to the high is where it is. And so 75% from the low to the high is green. 50% from the low to the high currently is black, and 25% from the low to the high is red. And so what that means is from the low to the high of price to this moment in time, here's 75% of that. That would be a 25% pullback. Here's halfway of that. That would be a 50% pullback. And here is 75% of that all the way down here. In other words, price is 75% below where it peaked. That would be bearish, okay? That's why it's red. And you can see when price trades around this, it pulls back to it, it tends to be bearish. This is a trend following or trend continuation, trend confirming type of study. There's no curve fit to this, okay? This doesn't happen after the fact. These are all things that occur in real time. This is what goes on right in front of your eyes, and it's recorded hard in black and white. Unlike moving averages and stochastics and MACD and all that other worthless rubbish that's just crap that will never make anyone a dime, right? All that stuff in time afterwards changes. It finds itself attracted to price. So if you look back at a chart that's X number of hours or days or weeks old with moving averages and stochastics and MACD applied, that's not how they looked in real time. They all morphed in hindsight. The studies that we use, they don't change in hindsight. This is fixed. This is fixed math right here. 75, 50, 25. Price is trading around 25 on this given day. Short it. Get a sell signal here. Short the hell out of it. Okay? And take profits accordingly. That's how this works. It's a very simple study. Let's go back a little bit more. Bearish, bearish, bearish. Of course, price went nowhere, but you're not buying. You know, the worst possible thing are traders like, okay, the market is down XYZ percent for whatever reason, and it's hitting these, you know, volume study levels or these, you know, profile zones or whatever rubbish, you know, kind of things that people looking to reverse trade do. And so they buy here and then they buy here and they buy here and they, you know, they buy here and they buy here and then they puke it out and they sell there and then the market finally goes up. Am I the only one who's ever done that here? Raise your hand. No, the majority of us have done that. We've tried to pick tops and bottoms in a market moving against us, and we can't. Okay, that can't be done. But if you're staying on the sell side, you're not getting hurt here. At the very least, at the very worst, you're taking small losses or you're getting out at par, and then, you know, of course, price does whatever else it does, and you know, you do what you do. The hard fast rules here that I use this for, I'm never a buyer right at the 25 dynam level, let's call it that. I'm never a buyer here, and I'm never a seller up here. Okay, I'm a buyer inside of here, and especially above the 50%. If I get long signals, I'm taking those. And below the 50%, if I get sell signals, I'm taking those. And once again, this has nothing to do with where you get in or where you get out of a trade. This is not a trade signal generating study. I don't sell here simply because price is doing something, and I don't buy here simply because price is doing something. I will not sell here, 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 because if I did, I would have gotten stopped out about 5 times before selling here finally worked. Statistically probable doesn't happen. But I will sell here. You know, I'll sell in these zones, and I will give up this distance from here to here. I will give that up for all 4 or 5 of these losses here. Okay? When the real move comes and it's time to sell, you're selling in these zones. You're selling either in here if you're getting sell signals, or you're selling in here, and you're following trend because price is telling you, look, we pulled back 75% from the highs. That's weak. It sold off 3/4 of its peak gains. All right, that's bearish. See if I got enough chart data here to show something bullish. Probably not, because the S&P's been down a bazillion days in a row. How about we, let's go to crude oil. I don't know if we can find an update in crude either here. Well, not in the data, but trust me when I say that a trend day up or a trend move up in crude is going to come around here, and then it's going to continue higher, and you can keep buying, you know, signals that occur when you have pullbacks there. And trust me when I say that when you get sell signals here, they work. All right. Now, if I were trading in this period of time, and a sell signal was generated on my trigger chart, if you will, the approach that I use to generate entries, and I sold this, I'd get stopped out 5 ticks because that's the stop I use, and then sold here and then stopped out 5 ticks, and then sold here, so I'm down 10 ticks, and then I sell here and it runs whatever 30, 40 ticks, and I'm, you know, net profitable for the day. What I'm not doing is fighting the market. Okay, I'm not buying where I shouldn't be, and I'm not selling where I shouldn't be. In other words, I'm not selling any sell signals here, and I'm not buying any sell signals here, because one of those worked and 2 of them didn't. Right? Statistical odds of probability. This tool is available to anyone. I make it available to the public, and I just have it set up. You can plot other lines of study here, you know, fib values and stuff. I just have 25, 50, and 75, and I use it in the manner that discussed. It's simply a quick visual filter. Let's see, you know what, let's do a 5-minute here and grab a bunch more data. Let's get 30 minutes. It's a quick visual filter. In other words, you know, where is price? Is this a safe zone or an unsafe zone? See if I can get a trend day up. Crude's been a mess lately. Well, you got the trend day down. Here's a trend day anyhow. So my system generates buy signals, and I filter it with this. Okay, good to go here long. Okay, good to go here long. Okay, good to go here long. Okay, none of those worked. Good to go here short, 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 short all the way. Instead of, well, this, looks like the bottom, or here's a something, or here's a something, or here's a something. Buying all the way down and getting absolutely obliterated, which too many traders do and have done. Me being one of those in the distant past, back before I understood the power of following directional markets. I would try to guess where the turns would happen, and with abysmal results, just like you've had if you've tried that too. So very powerful, very simple, price action based tech analysis tool. It's available to you. Just shoot me an email anytime if you would like to check it out, and I will happily send you a copy. Hope this helps. Let's move on to the next segment, the CM TrendBender. Okay then, the CM TrendBender. Once again, this is a price action based tool that tells us where price happens to be at any moment in time relative to where it was. All right, these are standard deviations from the average range before. Let me say that in English. When the line here is red, price is bearish, and when the line here is green, price is bullish, and don't do the opposite. Okay, if you do the opposite, then do so with smaller size. For example, if you trade multiple contracts, let's say 2, and you get a buy signal when this line is red, then trade 1 or none. I promise you, if you never buy the market when this line is red, and you never sell the market when this line is green, your odds of probability will be very high, 50% or greater, depending on your profit size. I mean, you could have a 90% win ratio or more if your profit size is small. Win ratios are inverse to the size of profit that you want, but that's a completely different topic. If you want to stay on the winning side of price, then follow this, because price is telling you whether it's weak or strong, and a body in motion tends to stay in motion. And in motion is where in the profits exist for traders. Okay, here's Friday, November 4th. Here's crude oil. Here's the 8 a.m. reaction to the non-farm payroll. And then here is the pit session of trading open. Everything is bearish from here. It's all in sell mode from here. If you're getting sell signals, then eventually you're on the correct side of the market. And there you go. Remember that 100 pip explosion that we talked about in the first video segment, where OPEC was rumored to do whatever, and the stupid bots fall for it every single time, and they knee-jerk because they have to. And the market has dealt with 100 of these rumors, sometimes 2 or 3 or 6 a day, or within a 24-hour period in crude oil this year, because the people who want to influence the market know that works. So they plant the rumor, the market reacts. See how it broke the trend bender, and then see how it did this. And now, if you could get a buy signal anywhere here, which is dubious because price was screaming, but if you could, that worked. Okay, trend bender keeps you on the correct side of price action. Let me see where my drag bar is here. I don't know how much data I have. The day before, November 3rd. So this is the pre-market, and then here's where the pit session opens, and then they go from bullish bias to bearish bias confirmed. Sell signals here, if you're selling, you might get chopped out in the spikes, but if you continue to sell, but more importantly, don't buy, eventually you're going to catch something that runs for distance, and eventually you're going to be profitable. Now, in the choppiest of days, and they look like this, the choppiest of days, you're gonna see this happen, where prices just keeps flipping from bullish bias to bearish, and it goes nowhere. But the other thing is, if you have a entry method approach, a completely different system, if you will, for picking trades, your system should not be picking many longs in this zone, and it shouldn't be picking many shorts in this zone, and it should be picking shorts in this zone as price is moving lower. So let me say that another way. If you don't have a system or approach that tells you where the entries are, more often than not, when price is going in the dominant direction, then you don't have an entry system that's worth anything. Matter of fact, you have a negative expectancy entry system. But if you apply this type of study and the price direction filters that we use to help you time whether buy signals or sell signals make sense, you're going to up your odds of probability of success greatly. Okay, and again, everything we do is not market or symbol specific. It works for every market and every time frame with zero exceptions. Obviously, this was the inventory / FOMC day where dead drift going into the 10:30 news. Obviously, then the 10:30 news, the algos wiped out all of the buy stops, and then they took the market. After that, they took the market down, and then absolutely nothing else happened for the rest of the day. Here's one of those days where it's just dead sideways chop. And if all you're doing is looking for sell signals, then you're probably getting them here, 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 here. So you're not getting creamed. But what isn't happening is you're not getting buy signals here and here and here and here, so that you're getting chopped to pieces out of your buy signals when the market's not even blipping that direction. So there's a lot more use for this tool than what we've just profiled here. Once again, I'm just giving the precursory for people to understand, and that's the purpose of these videos. So if you're out there wondering, well, gosh, what moving average type should I, or what exact MACD settings should I use, or what volume bars, volume study on which bar, is it the control and point of influence, or whatever that kind of lingo is. That's all vague. That's all very 1,000 shades of gray is trying to figure out what comes next. This is black and white. Here's price. It did, price did this, it's bearish. So, just sell it. Price did that, it's bullish. Just look for buy signals. That gives you a chance if you're looking in confidence rather than constantly second guessing. And let me say it this way. When you see this happen in the market and then the pit session opens, or whatever the case may be, here it is, and you have confidence that the market is most likely going to go lower. All right. And if you make this same decision 100 different times in similar setups, you're going to prevail the majority of times. Okay. So if you know that and you have that confidence, then it instills the discipline in you to only look for sell signals. And if you get a buy signal, that little voice in the back of your mind isn't saying, well, this might be the one. This might be the mother of all buy signals, and maybe I should get long here. And what do I do? And then you take that buy signal, and then it doesn't go anywhere, and then you're flashing a sell signal right around your stop, and you're thinking to yourself, because of the uncertainty, well, maybe I should just cancel the stop and hold this a little longer. Maybe I should give it a little more room to work. Maybe I should ignore the sell signal, because you're married to that position you currently have. You're long, mistakenly so, and price is going against you to the point of where you should be getting out. But if you don't have that ironclad certainty of what's probable, you're just gambling then. You're just throwing darts, and you hope this dart will win. And so you pull the stop, and then you watch price collapse, and it takes a much bigger loss than you ever planned on, and you're suffering. And then you finally kill that trade, only to watch price reverse and go back up, and would have let you out a break even, or even it would have even been profitable. But you were wrong. Okay? In this case, and don't tell me you haven't experienced that, because you have. If you've not experienced that whole mental anguish right there, then you've not traded very long. And if you traded very long, you've experienced that more than once. All right? That we all do. But on the other hand, if you have the confidence of a price action tool like this that you trust, and that trust comes from your own observations over a significant period of time, I'm like, all right, well, until this thing turns green, I'm just going to short it, because I know more often than not the short side is going to reward me. You're expecting a reward. You're not expecting a surprise. And the short side rewards you, and it reinforces your trust in the process, and there you go. And then the next time when price turns green, if you're still actively trading, you're like, oh, I don't really like this because price was trending down. Now all of a sudden it's giving me, a reversal warning on the filtration. I'm getting a buy signal. I will steel myself and take it. I won't second guess. I will take it. And guess what happens? You get rewarded. More often than not. There are times when trades are wrong because nothing is predictable on each sequence. Goes back to the quarter flipping that we spoke of before. You can flip a quarter 5 times on a choppy day, and it'll come up heads, tails, heads, tails, heads, tails. And you think to yourself, well, pretty soon there's got to be a streak because the quarter's, not had a streak for a long time. Well, that's not true. The quarter could go heads, tails, heads, tails, heads, tails 20, 25, 30 times. It could go an infinite number of times in reality because that's statistics. But if you bet tails every time this is red only, and you bet heads every time this is green only, then the majority of your coin tosses you're going to win over time. That's a statistical certainty. It's a powerful part of trading, knowing which way price is going to go from a mathematical standpoint, from a statistical standpoint. I understand that sounds boring and dry. I understand it's much more exciting to think that you can have some kind of secret insight or, a mythical indicator or, a mystical guru, savant, advisor, or any of that stuff that doesn't exist. But that's not how it exists. Trading is just grinding out successful trades day after week after month and then letting the results take over from there. I hope this series has helped. It's meant to introduce you to the tools that we use and why what we do works. The CM TrendBender is not available to the public. It's only provided with team members for either the home study course or whatever else we're doing. But it's incredibly cheap for the price, if you will. It's worth every penny and then some to serious active traders. I hope this has helped. I hope you're finding success. I hope you're creating success for yourself because success lies within, not anywhere else. Best trading wishes.